Hello everyone, I hope you all are doing good. My name is Sahil Budki and today I'll be walking you through a very interesting project in finance domain named as Bank Loan Report Analysis or Bank Loan Report Dashboard. This project visualizes bank loan data and key performance indicators, that is KPIs, through an interactive dashboard built with Power BI. The main goal is to empower analysts and decision makers with clear, actionable insights into loan application trends, total funding amount, total amount received, interest rate, debt to income ratio, and loan quality breakdown like good or bad loans. This dashboard specifically is designed emphasizing high contrast, readability, and efficient interactivity for rapid business review. Before I start with this Power BI project, I would like to let you know that all the analytical queries, that is, all this before performing it in DAX, were first executed in SQL to verify the data structure, the logic behind our results. For example, I have also included the Word document here where I have first performed the analysis in SQL using all these queries like loan applications, month to date loan applications, and all that. We'll cross verify it when I will be explaining all the detailed insights further in the video. We'll cross verify the SQL results with our DAX measures which we have used to calculate in Power BI. So without any further ado, let's start with the project. So this project consists of three different pages. First is analysis, that is summary of the project. It provides a comprehensive executive snapshot of overall bank loan activity and health. Then we have the second page of overview, which particularly breaks down loan applications and relevant KPIs by key dimensions for further pattern discovery like total loan application by month, by state, and all that. Then I have a details page where it enables granular record level exploration and validation of data. It specifically gives a tabular view of individual loans with fields like ID, purpose, home ownership, and etc. So let's start with the first page, that is summary page. Here, as you can see, I have included 5 different KPIs here, cards here, that is total loan applications. So total number of loan applications received by the bank from the user. It also shows a cumulative figure of 38,600, and it also shows broken out month to date calculations as well as month on month calculation. Why this particular matrix matter is because it is a key measure of customer interest and market demand for loans. If this particular number is rising, that means it indicates that good market activity is there, as well as people are showing their trust towards the bank. It also highlights trends like this month, for a particular month, it had 4,314 new applications, which is significantly 6.9% rise from the previous month. Then we have total funded amount. This particularly tells that the amount which was funded by the bank towards the users. So around 435 million records dollars were funded. Out of all the applications, we can see $54 million was funded in the current period of month, and it also shows 13% increase compared to last month. So this growth signals an increase in loans being approved and paid out to the users. Then we have total amount received. It shows that the amount that was collected from the users, or the total repayments or incoming funds from borrowers. Here also we have month to date column and month on month. It shows around $58 million received for this particular month, and a strong 15.8% of month on month increase rate. Here you can see month on month for total amount received is greater than total funded amount. So this shows a good profitability analysis. Then we have average interest rate, that is the rate that was charged by the bank towards the user for taking the loan. It shows as 12%. Here also I have included month to date and month on month metrics. Then average DTI, that is debt to income ratio. It is generally preferred by banks that the DTI should be low. It should not increase a particular threshold. That means around 40 to 45%. If a person has a DTI ratio of 40 to 45%, that means he or she is not eligible to get a loan, because if you have debts that are way higher than what you're earning in a particular month, then how you would be able to repay the loan payments, right? So all these things are considered before giving the loan. So it is generally preferable to have a low DTI ratio. So here you can see the average DTI ratio for all the applications is 13%. Now let's cross verify it with our SQL queries. Here you can see total loan applications 38,576, then 4,314, that is month to date loan applications. Same for total funded amount 435 million, total amount received, average interest rate, and our DTI. So all the values from the SQL queries matches with our DAX measures. Let me quickly show you one of my DAX measures so that I can explain how the logic works here. Firstly, I calculated the total loan approved amount. Here you can see I have calculated a total loan application. That is I simply counted the ID from our dataset. That is, it shows that the total loan applications in our dataset. Then I move towards month to date loan applications. Here I calculated month to date loan applications using the total loan application DAX measure which we created previously, and segregated it using the date. Column here. Then after calculating month to date, I also calculated previous month to date column. This is the same logic used, just the difference is we are calculating for the previous month, so therefore I have specifically mentioned -1 from the previous month. That is, this tells that we are in current month, and if we entered -1, that it calculates the total loan applications of the previous month. And then what I did was I calculated month on month total amount, month on month loan applications received. The basic formula is it calculates the difference between this month's loan application by previous month's loan applications and divides it by the previous month loan application, and whatever the number comes shows us that if there is an improvement or there is a decrease in loan application. Same logic applied for different KPIs like total funded, total amount received. Just that I have changed this particular thing here. Now let's move on to our second important insight, that is good loan versus bad loan. Here what I did was I separated the loan status. I grouped the loan status into two parts, that is good loan and bad loan here. So good loan consists of loan status like current and fully paid, and bad loan consists of loan status like charged off. So I calculated good loan percentage by tracking the total loan applications, then segregating it by only including loans that have the specific value, that is good loan, and then divided it by the total loan applications. This gave me the good loan percentage. Same for the bad loan percentage. Then I also calculated the good loan applications, how much good loan applications are in particular data set, then good loan funded amount by the bank and the amount received from the bank. Same thing I did for bad loan applications. So we can see that 86% good loan were issued by the bank, so this shows a healthy portfolio from the bank's perspective, and only 5,000 loan out of 38,000 were classified as bad loan, wherein bad loan funded amount of 65 million and the received amount from the user towards the bank was just $37 million. Then I also included a loan status table wherein it shows the particular loan status, that is current loan, charge of loan, fully paid loan, and with respect to that their total loan applications. So in our data set almost 80 to 90% of loan applications are fully paid, that is 32,000 out of 38,000. Then I also included slicers to filter out with respect to a particular state. Like for example, I only want California's information, so I can click here and I can view only the loan applications that were present in California state. That is total 6,894 total loan applications. Then all these different metrics. Same we can do with grades. Grade specify and segregates the customers into 7 different values. That is, if a customer is in grade A, that means his returns are quite good. The bank considers them as a good customer. The lower it goes, the higher interest rate increases, and also the bad loan issue percentage also increases. So if a person or if a person is in the category A, B, C, they are considered as a good client for returning the particular amount that was taken as loan. Then we also have by what purpose a particular customer took loan, that is for debt consolidation, or for credit card, for purchasing a car, for home improvements, for educational purposes. These are different categories by which you can analyze. Now let's move to our second page, that is the overview page. This particular page highlights in-depth exploration of loan data by key dimensions. You can see we have the same KPIs here, but the insights are different. That is total loan applications by month. We can analyze here month by month how much applications have increased or decreased. Then we also get to know total loan applications divided into states. Like for California, the total loan applications were 6,894, and for other states as well. Then we also get to know about total loan application by term. So users generally prefer taking loan applications for shorter period of time, that is for 36 months as compared to 60 months. Then we also have total loan applications by employee length. So by looking at this insights, we get to know that employee who have around 10 plus years of experience tend to take more amount of loan as compared to other different variables. Like people with only 1 year of experience tend to take loans up to, are preferably lesser than people who have around 10 plus years of experience. Then we also have why, by what purpose people are taking loans, like for debt consolidation, for credit card, for other purpose, for home improvement. Then we also get to know that people who generally live in rent tend to take more amount of loan than people who own a particular house. I would like to let you know that I've also included a field parameter here. That is, you can see here I've included 3 different fields in it, that is total loan application, total funded amount, and total amount received. What it does is it easily toggles between multiple fields or breakdowns within a single chart for deeper insight. Like for example, I want to know total funded amount for all of this insights. So I can just click on here, and once I click on total funded amount, the whole chart changes. You can see the total funded amount by month change, total funded amount by state. So you don't have to manually do it for every single visualization here. You can just simply create a field parameter by specifying what you want to show in the chart. Like for example, I wanted to show total loan applications, funded amount, and amount received. See here, if I click on total amount received, the chart again changes. So this is how field parameters helps in easily breaking down different fields. and easily helps us in toggling between different fields without actually doing it manually for all the charts. Then I also included here good versus bad loan filter. That is, if I only want to see the applicants for good loan, I can see it right here that 33,000 users were actually classified as good loan. Then bad loan were around 5,000. So if you want to separate good loan and bad loan, you can use this particular filter. Then again we have the same filter here, and grade. Now let's move to our third and the last page. So the purpose of this page is to give record level data analysis and validation. It provides a tabular view of individual loans, that is loan ID, the purpose behind taking the loan, home ownership, grade, subgrade, issuing date of loan, funded amount by the bank, interest rate on what interest was charged towards this amount, installment, that is per month what particular amount a user is paying, then the total amount received, and the status of loan. So if a particular analyst wants to drill into a specific loan type or outlier, they can use the details page for a deep dive into individual cases. So this is all about this particular project. I hope you all understood what I was trying to convey. If anyone has any doubt or want to suggest some improvements in this particular project, they can comment the same in this below the video. So thank you all. This was all about bank loan report dashboard project.